when you have a real-time core, you make errors in real time, right? Like when you have batch,
yeah.
When you have batch, like you have chances to fix things before the next day. And
That's true,
and you don't realize how much you take advantage of that, right? But when you have a real-time core and there's a defect introduced or whatever, it's gone. See how you've made the mistake. I was like, oh, let's do digital marketing and commercial, and they're like, slow down, new guy, right? It's like, we're not pushing offers to our customers. Like, we're going to take them out for golf and dinner. I was like, oh.
What do you think where the core is headed? Is there a line that we can draw today?
Yeah, I mean, I think you can see where things are going.
Having worked in both the kind of verticals, how did you find specifically the technology roadmaps of the two different?
Yeah, I'd say they're very different, right? Retail is a high scale, low customization. Business to consumer, right? If you look at the commercial and especially the corporate side, like the higher end of the commercial stack, it's a B2B. It's a B2B market, right? And so it's still very much a relationship-based approach. Technology is critical in commercial, but it enhances the relationship. It doesn't replace it.
A lot of people start talking about that even their CRM today is becoming their core. Some people would say that their loan origination system is also actually part of the core itself. And the way things are headed, so you're talking about fintechs and all, some kind of open banking and all. What do you think where the core is headed? Is there a line that we can draw today?
I would say, though, right, it's been more monolithic historically. And, where things are going, and I would say, we've seen it in the last 5 years, especially, right? It's going towards, I would say, you hear the term modern core now, right?
Yeah.
There's the emergence in the last 5 years of this concept of a modern core, which tends to be cloud-based. You might be able to run on-prem, but cloud-based. It's modular. They've been mostly built API first, right? So that you're able to wrap around it, right? So that you're not building orchestration, you're not building any sort of decisioning or experience, certainly not experience into the core. And that, like, I know JP Morgan, right? Chase with Thought Machine, and Zeta, who's a card core. I would say they also have a deposit core. Mambu, right? Like, this is where it's going. I think it's a marathon, not a sprint. Narrow down the core, deposit core, as an example, right? Separate from credit card, separate from mortgage, right? Narrow down the services around it so that it's really just, the ledger, essentially, right? And in a thin layer above that. And then weave, compose and orchestrate around that, right? I think that is where it's heading.
How did the overall banking technology stack specifically, how did you see that evolve? And any specific events that you would want to highlight?
Prior to web banking, I would say technology was more in the back office. Banking was still done at branches with tellers, right? It was indirect. ATMs had some presence for some, mostly, cash withdrawal, but technology was in the back, right? It was in the back office. It was plumbing. It was infrastructure. Technology was a cost center. It was more about the expenses and trying to minimize, cost. And it's changed certainly over the last 2 decades to where it's a strategic enabler, right? And that's with sort of every step of the way. But I would say that was the inflection point. Certainly, to me, with mobile, you move from web to mobile, right? Where, although web-based banking was used, once it's like in your pocket, it's with you every day. the demands increased, even more. The next big inflection point was fintech, right? There was a ton of competitive pressure because of the neobanks and then also just very, I would say, targeted fintech solutions for everything. And so there was a reaction from the banks to really double down on their investment, right? Like we're competing with these companies, and there was at the time it was there was a sense that was a real threat to banking, right? To the traditional banks. Now I think in retrospect, right, it's just changed. How we've responded, the bigger banks have responded.
That today's modern core would have a built-in API support. So, or they would be API first kind of a core. And we don't know, I think in 5 years down the line, maybe it might be something which is based on AI first kind of a core.
It's very common that, auto is under one team, credit card is another team, and they all make their own decisions. And because nobody's taking a step back and saying, hey, should we, is there a common solution here, right? And it is, in banks, I would say this is a tough sell. Your financial results and, a public company or quarter by quarter, right? Investing tens of millions of dollars in something that you're not going to see the return for 3, 4, or 5 years or longer is a tough sell.
When we talk about real-time processing and hosting most of the credit intelligence today, what do you think is the best layer to do it? Since the overall lending stacks have become quite complex, right from the point of core to your decision engines, and then you have orchestration layers, so many layers are there. Where do you think most of the credit intelligence would actually evolve?
Yeah, now? I think it's in the sort of, there's a decisioning layer. At least that's the way we approached it. Which sits above the core, and not just the core, but a bunch of other data stores as well, right? So it belongs to me. There's orchestration that's wiring everything together. The core or cores, right, are just one piece of that, and then there's a bunch of other sources, right? And the decisioning is sort of its own layer.
Our journey in Refo, when we started. One of the key reasons to start Refo actually was this only, because we were seeing that banks were consuming data from N different sources. And with the advent of fintechs, embedded banking and all, a lot of data sources were coming to the banks. And the capability to actually consume this heterogeneous data sources and then actually do decisioning on top of it was one of the key pain points that we could observe. And anything like open banking and embedded banking even increases this further. So once you have a very strong decisioning engine sitting in front of your core, I think it gives a lot of help to the banks.
It's critical. And we're evolving it as we speak to be more real time. We just a year ago, right? We were still at sort of a 45 days, like some of the data we were reading was 45 days old. So you could have defaulted on a loan and we would still approve you because, that happened in the last 45 days because we were reading from like a data warehouse and things. So that's just an evolution, right? But it definitely needs to be its own layer and, real-time enabled with orchestration. Like the Refo capabilities are spot on.
Beyond that, have you seen scenario where real-time actually came out to be more counterproductive in terms of the ROIs?
Well, yeah, there's complexity with real time, right? That I think sometimes aren't justified, right? I do think there's a bias now, right? As technologists, I think we're biased towards do everything real time. When you have a real time core, you make errors in real time, right? Like when you have batch, when you have batch, like you have chances to fix things before the next day. And, you don't realize how much you take advantage of that, right? But when you have a real-time core and there's a defect introduced or whatever, it's gone. See how you've made the mistake. You got to judge each place. I'm a fan of batch where it makes sense. I think, I think you start with real time, but then you go and sort of have to back away from it in some cases. The other area is with real time. There's a lot more reconciliation that needs to occur, which is much more difficult when it's distributed or real time versus batch recon is way easier. So I think we have to be pragmatic about where to apply real time.
There is constantly a term that is used, which is tech debt. So there is a lot of tech debt in the banking or in every industry, but banking, since we're talking about banking. But do you also think there is some tech equity that banking as a whole industry has created in the last couple of decades?
Just to go back real quick to your point about tech debt. The reality, like you said, it's not just banking. I think any organization, over time is going to, accrue tech debt. And, it's in any company that's starting fresh is not going to have much, right? So it's sort of just the nature of the beast. I don't view it as a bad thing. But in terms of, equity or things that could be leveraged,